Hi, Larry Gaines, PowerCycleTrading.com. You know, in trading, it really comes down to three things to make successful trades: direction, timing, and then, you're managing your risk. So I want to take you through, kind of guide you through, kind of navigate you through, how we go about navigating any kind of market, but especially when we get into a lot of market uncertainty, you have to have the right trading indicators or tools to help you. So here's a trade that we set up over a week ago, and I'll step you through it. This was on the QQQ, going short QQQ. So this was using a weekly time frame. We use extreme range bands to show us when a market is super extended from a kind of a normal moving average, and we do this. I use a weekly or long-term time frame. So this was the first thing that we spotted. So we've been watching this market move, just steadily grinding up on the NASDAQ 100, the SPY. Now, when it gets to this really extended range band here, then we start looking at a long-term basis, and then we start looking at a reversal indicator down here below where my pointer is. And when this crosses, this yellow is a 14-period moving average of this reversal indicator when it's overbought over 90 percentile. So this is a very rare signal, and so we had this up to the 3 ATR extension here on the weekly long term from the 21-period moving average, and we got the crossover signal with our reversal indicator, so we went short. So it's a very, very rare signal. Last time we had this was back in February of this year, 2021, and this was about a 11% pullback. So that was one, and then prior to that, you have to go all the way back here to August or early September 2020, and this was a 13% pullback. So we had that signal there, reversal indicator here, extremely extended, very rare signal. So then we had our daily time frame and our other lower term time frames confirm this with momentum. I'll step you through that, show you this next. Now what we do is next we identify probable direction based on momentum. So here you can see QQQ daily time frame. I've got two different momentum measurements. Cycle 1 is a very, very fast momentum. Cycle 2 is confirming momentum, which is slower. So you can see this histogram starting to fade on the momentum. So what this is telling us, we're getting potential buying exhaustion, where we're running out of buyers, and that can lead to a potential bottom to the market or top to the bottom or top to the market and a reversal. So that's what we're getting right here on the 7th of September. So we went short here based on what I showed you earlier, the long-term indicator for extended, and then we had our momentum shifting down, cycle 1 and 2 on a daily, and then our lower time frames were also shifting down here. So here's a 2-hour all the way down. You can see momentum shifting negative. So that's a momentum trigger, and then we had the price trigger based on the extension from the weekly. Now the next thing is timing, and then the next thing is managing your trade. So with this trade, the trade setup that we originally did this as a put calendar diagonal, and then ended up adjusting this trade to what we call a put condor. So for a free trade where we had zero risk, and this went out for huge profits today, which was the expiration date of the 20th. So first off, also go check the video from the 13th of September. We'll walk you through it again, but let's take a look at the trade setup that we did. We adjusted a couple times, and the final adjustment we did adjusted this into a free trade, actually a credit spread trade where we had zero risk, and we ended up making on this trade over $800 per spread. So let me show you that. So we initiated this trade as the short trade setup on the 7th of September. We originally did this as a put calendar diagonal, and then we did two different adjustments, and the last adjustment we did last week adjusted this into this free trade. So this is what's known as a put condor. So you can see here, if you look at this is made up of a put debit spread. Okay, so it's 379, 370 here, and then we added a bull put credit spread, the 367.58 here to bring in credit. So after the adjustment, we had a free trade. This was actually $66 credit. So if this thing exploded to the upside, we'd still make $66. If it exploded to the downside, we'd make $66. But it went out currently today at 365.44. Not perfect. Perfect would have been in between these two short strikes, and it would have made over 966. But we took this off earlier today for over 800, and you can see it went out today at 780 on actually a credit of $66 for the upside or downside. So these are some really cool trades. You can see here credit 66, and then it went out $715, up 780. But you have to have direction, timing, and then you have to have good risk management, and using options, that's the way to get it. So I hope you find this trade interesting. If you'd like to learn more about these types of directional trades, the trading tools and option strategies used, make sure to check us out at PowerCycleTrading.com. Good luck trading.